Thanks so much for joining us. I'm Marlin Bohling with you, and we're already into a very busy Monday here. Lots of market action, and let's go ahead and dive into everything. And as we do, I want to introduce our very special guest, who happens to be in studio right next door, right over here. So we'll just keep moving over, and there he is. It's Chris Swift. How are you?
Good morning. I'm doing great.
Of course, he's with Swift Trading. He's based in Nashville, and lots to talk about. So let's go to the board and let's take a look at this corn market here. All right, starting with the corn quotes provided by bar chart. July corn 20 higher, Chris, at 801 1/4. You have December 12 1/4 higher now at 761 per bushel. Let's go ahead and check out the soybean trade. Well, on soybeans, we have the July contract 9 1/4 higher at 1655 3/4. New crop November is currently up 7 cents, now 7 1/4 higher at 1505 1/4. Now let's check out the Chicago wheat trade. Here you have the July contract, 69 1/4 higher, Chris, at 1246 3/4, getting up there in the neighborhood of going limit up again. Now remember, we started out limit up higher overnight when we started the Globex trade. In Kansas City wheat, you have July 70 higher at 1352. So they sold it off a couple of times, and now it's right back at it again, going limit up. Okay, you have the Minneapolis spring wheat trade showing July 55 cents higher. We're now at 1380 per bushel, just a nickel off of its overnight high, which I believe is still its limit, is it not? 60 cents, yes. I believe, Minneapolis.
Yeah.
Deep breath. India talk, is there more than that affecting the market today?
Probably a little bit of everything still is. We know that with our crop planting progress coming on right now, we've got, we're going to assume close to 50% when we get today's reading out. And the wheat market is probably the one standing all by itself right now, simply because of the issues that we have domestically as well as worldwide.
Now, what do we do with this? I mean, how do we protect what profit we may have made now or locked in at this point, even though plants may not even be out of the ground yet. They may not even be planted yet, and sometimes, or in some cases here. But gosh, you hate to see prices like this slip away. You know?
Well, and you do. And the one thing that we note is that we're getting up to the end of planting season. So once you get past the second week of June, everything slows down tremendously, and you have the majority of the crops in. So we've got about a 4-week window left here before it's all over with. And regardless of what happens, whether we do get it all in the ground or we do not, more likely than not, you'll see prices kind of stabilize a little bit as we get that product into the ground.
Okay, I want to take a look at a chart on December corn for this year, and we'll see what it's showing here right now. It's up 14 1/2. We're at 763 1/4. The reason I bring that up is if we go out one more year, December of 23, 652 1/2. That's up 7 cents. Not a bad level, is it?
Oh, no, not at all. And because clearly we don't know what this year's crop is going to be that makes next year's that much more crucial. It could probably hold that premium for a long time, even if we start to see the front months come down a little bit.
Something to think about.
Absolutely.
Okay, and of course, wheat is its own creature today. Well, we're going to pause right here, and we'll talk more with Chris Swift about the livestock side of the equation. We'll do that when we come back. Well, we see the grain prices just lifting off today. Let's see what the livestock trade is doing. First time we checked, we had live cattle going higher while the feeders were under pressure. So far, we still have live cattle higher. June is up 72 at 132.80, and the August up $1.15 at 133.50. Now, Chris Swift is back with us. Of those months, which one do you give more credence to when you're following it on the market?
Well, right now it's still June and August because those are spot months, and we're at a positive basis to those. So it's interesting to see that they're still discounting cattle $6 to $8 lower than what they're trading cash at today.
That's correct. Okay, now let's take a look at the feeder cattle side. This is different. Now, you I guess we have to ignore the May for the most part. Is most of the action in August now?
August and September, yes.
Okay, so August is down $1.12, now $1.15 lower at 166.87. Totally the flip side, the opposite of what's going on in live cattle. Now, they can't do this forever, right?
No, but they can do it for a little while. The basis is what we're most concerned with right now. And in the feeder cattle, you're still carrying a very negative basis where the futures market is trading higher than what the cash is. And we notice that in the fat market, it's a positive basis because the cash is trading almost $8 higher than what the futures are. So they will come together a little bit closer, but in reality, this is a feed cost issue. It costs more to feed those cattle up, so they're going to make the adjustment somewhere in the feeder cattle, as they don't want to have to feed that fed steer as much. They have a little bit lighter carcass weight to them.
Now, look at the prices on the fall months, the October and November, they're above 170. You compare that to the May right now, it's at 157, but if it drops off the board, you have August at 167. I mean, that's a big jump all at one time.
It is, but it doesn't happen all at one time. They still got the months from between now and August to actually converge, and they'll do just a little bit at a time. And as we see the May contract, I think the index is around 156 and change. The futures at 157. They're less than $1 apart. 2 weeks left to go. The likelihood of those deviating from one another is not very good.
Well, now let's take a look at the lean hog market. This is the one that looked like it was rolling right off the edge of a cliff here a few days ago. And it has rebounded back a couple of days straight, and now today they're adding to it. Look at the June contract go, up $2.40 at 103.15. July gaining $2.15 today. We're at 103.35. Is this market confirming that it has made a bottom now?
Might be closer to a dead cat bounce than it is a reversal.
Really?
Well, simply because we've sold off for so long, and the index is still lower. So the index is not gaining much steam. The cutout isn't gaining much steam. So I think this is just a reprieve from the 20-some-odd dollars it lost over the last 2 weeks.
Do you think exports will pick up if China reopens?
They might pick up a little bit, but I doubt very much.
Really?
I think their hog operations now are back to 100% plus.
Oh, is that right?
So they're probably not needing near as much pork from the U.S. as what we thought they should have before.
Interesting. All right. Well, thanks for weighing
Absolutely.
in on that. I appreciate that. Well, that's Chris Swift of Swift Trading. He's based here in Nashville. That's a look at our markets. Janet, back to you.